Okay, hello traders. Welcome to this live intraday strategy webinar on SB Trade Desk. Today is Thursday, June 7th. Michael Boutros here with you this morning. Aurelian, Mark, Peter, and Pete in the room today. Steve and Ziad, great to see everyone here. So, right off the bat, we'll just get started with a quick note here. Sterling's making some pretty outsized moves. I think it's just stopping everyone out again. We talked about the possibility of a bear flag formation here. We'll see if there's any follow through, but this pullback definitely has caught my attention in pounds, so we'll go over that. On the menu for today, DXY, obviously, with the move that we're making, pulling further back off resistance. Aussie looking good, but precarious into the 77 handle, so watch that. Dollar CAD and Sterling. Again, the biggest mover so far in intraday movements. We'll circle back and look at the Euro. Euro CAD with the breakout to the upside. That's continuing to push through. If there's anyone in the room that has or wants to take a look at Aussie Kiwi, I haven't really been paying attention, but we have been covering that, so I'll give you an update on that if there's time. Dollar Yen, Euro Aussie, and Euro Yen. Nice longs there. And we'll circle back real quick to cover crude and gold before we close out the session. Last session for the week. I want to make sure we cover both of those assets, which are on the move, I should say. And that's what I have for today. So if any other questions, trade setups, as usual, feel free to throw them on the message board at any time. Here's what the DXY looks like as we start off this session. I gave you an update on this yesterday. The last update was late last month. We were talking about that failure to push through the November highs from earlier in the year. And certainly that pullback has now materialized to a much more substantiated correction. The move was 94.20 to 94.27. That was sort of our level of where we wanted to see this thing hold. On a weekly standpoint, that's exactly what it did. So again, almost doji-like action. Here's the pullback. From a weekly standpoint, you don't come into anything really meaningful until 92.28 into 92.50s, 92.60. Okay, you're basically looking at the 52-week moving average and the yearly open resistance. Now support. So that's sort of the longer term prospects of where to look for on the dollar. Intraday, or I should say daily first, there's 92.80s, just below the 93 handle, okay, 92.70s, 92.80s. You have basics former slope support, parallel here, perfect touch, perfect touch, perfect touch, break saw acceleration, support. That converges on the median line for the pitchfork we've been following from the lows here last year and this year. There's the median line. Both those converge right here. So the first sort of pivot level I'm looking for on this dollar pullback is materialized pretty well. If you don't have access to DXY or you're trading stateside, obviously we'll take a look at the Euro, which is following suit as one would expect. But for the DXY, that's sort of my sweet spot. I really want to see a strong reaction there to get some guidance moving forward. If we break below that, you're basically looking for a run back into the yearly open, which would put us flat on the year, despite all this volatility that we've seen. So first things first, on this approach, here's what we're looking at intraday. Okay, not too much, emphasis on this slope yet, but we did present this yesterday, just kind of giving an indication. Next level down right here is that same level we were looking at on the daily chart, 92.70s, 92.80 right here. You have former pitchfork resistance, break, support, okay? And if we take a parallel from the highs, just really basic stuff, gives us basically a convergence there heading into the close of the week. So the focus is still lower in the DXY by my estimates below 94.27. Even if we were to rally, it's a pretty big level, Now, there's already people who are, the Twitter trolls who are, maybe they're looking at this and they're saying, okay, this is a head and shoulders formation. If that is the case, and again, it's an ugly one, but let's say it is the case, I'll take a really conservative measured move. Look what happens. The measured move, okay, if this is a left shoulder head, right shoulder break, that measured move gives you a target right down at 92.30. We've been highlighting 92.28, 92.44. Yearly open, basic 38.2 retracement of this advance. So the levels are mapping out really nice. And whether it's a head and shoulders break or whether or not, the major support regions that we're looking for are still the same key pivots in price that we've been following. And all that overlap just gives us a little bit more conviction on it. So yeah, I mean, so, momentum's coming in support here. I wouldn't be surprised if we did see some sort of recovery in US trade, but the focus is still lower. If we pushed higher, look for initial resistance right around here. Okay, the former swing lows, opening range lows for the week. You got your weekly open just higher, but this would be sort of a nice exhaustion point. A bearish invalidation, excuse me, is still 94.28. Downside targets, look for 92.70s, 92.80s first spot. Then this is your key zone of support. Any questions on DXY? Okay. Number 2, Aussie dollar. Our favored move so far this week. I don't have anything left on this as far as positioning personally, just as a disclaimer, but I still like it. It's the question you ask yourself from here. If you're still holding longs, remember the two levels of majors, the two inflection points we've been watching. Let's call it that: 76.89, a basic 38.2, and again the measured move for the inverse head and shoulders here, which was a lot cleaner, gave us 77.09, right? And that converges on the 50 line. So there's not much event risk left. Next week is huge, guys. You have the ECB. I mean, you have the Fed. You have the Korea summit, the North Korean summit with President Trump. You have so much headline event risk that we're likely to see a lot more volatility heading into the latter part of June. So on this trade, if we get a spike into 76, 88, 77, any longs that you have left over, you definitely want to be looking to clean it up here. Momentum is not looking too strong. Here's divergence with price action making a higher high, the oscillator making a lower high. Looks like a trigger break here is about to give way as well. So I wouldn't want to press a short on it, but at the same time, if you're long, watch these two levels for exits on the last position. And if we do get some sort of meaningful reaction, this is the level I'd be trading against for some sort of pullback play. Ultimately, Aussie on longer term charts, it's a pretty big region. Okay, here's the weekly chart that we've been following on Aussie dollar. 77.08, there's that measured objective head and shoulders move. It converges on the weekly charts with the 75% line, this pitchfork formation. And you have the long 200 week moving average all in this zone. So I'm mindful of taking any fresh long Aussie exposure here. Obviously, we might have pulled out a little bit too early on the long, but this is a big region for me. So watch Aussie heading into 77. The possibility, the risk for some sort of washout on a spike into that region, but with the same respect, that's the level to beat. If we get through that on a daily close basis, you have to be looking objectively higher towards 77.70s, 77.75. That'd be basically 50% retracement of the entire decline. On the downside, obviously we were saying yesterday, look for support initially at that median line. Really, you have that swing low and that swing high. Friday's high, and then the swing low from yesterday. Those converge, or this week, I should say, not yesterday. Those converge right around 75.90. So let's just call it 76. You kind of want to see any pullback hold above this region if this advance has legs. Okay. And one other thing here, bear with me one moment. I do want to see what this extension looks like. Ooh, okay, interesting. It's a good thing we didn't miss that one. All right, so the 100% extension's right here. So this now completes, this advance completes 2 equal legs off the low. So in the event that this turns out to be just a correction, okay, just a bounce higher within the broader downtrend, keep in mind we're still butting up against that channel, basic objective channel resistance. 1 touch, 2 touch, 3 touch. It's right here. And 100% extension is at 76.70. So let's do this. Let's kill this. Watch for immediate resistance again, right here. Okay, don't dump that 38.2, but just keep an eye. That's a soft target at this point in light of this thing. So if we break through 76.70, I'd have a hold on this till like 77. And I'd dump on the rest here. But any way you slice it, it's just starting to look a little bit tired. So use some caution on this. Any questions on Aussie? Levels are pretty clean. Okay. All right, moving right along. Number 3 from last night was dollar CAD. So we took a shot at this earlier in the week, didn't work. We had drawn a pitchfork on this in the previous update. We broke right through the highs, right? We had this drawn earlier in the week on the open. We broke right through this. I had to stop against Friday's high, which I told you guys. We just got stopped out and it slammed lower. Now we might, we don't want to do the same mistake twice, but this new pitchfork, taking into account that new high, did see some support at the median line. So for me, it's basically, if this is going to work, we're still looking for exhaustion at the same two levels, either 29.62 or basically 130, 129.97. You want to see this thing start to hold some downslope if we're going to make a move. Here's dollar CAD now. Let me take you to the weekly chart first. The whole premise, we went over this yesterday again, is basic trendline resistance off the highs from 2016. So just a nice spot as momentum is really getting tired here, failing ahead of 60 for this thing to turn if we're going to hold this downtrend. Daily chart look like this. Okay. You could see again, basic 786 retracement, yada yada, not really important. It's the slope on a closed basis has been struggling to really make any progress here. So even the momentum trigger that gave out, we're back below that again, really flattening out here. So it's not a super conviction trade, but we haven't invalidated the downside idea yet. Okay, it was all about 130, and we're back below it. So here's what it looks like on the intraday. Okay, little messy. I wouldn't say it's the cleanest setup, but the levels are, starting to hold. Again, so here's what we looked like last night. 129.62. Basically been butting up against that ever since overnight trade. We tried to push higher. The high was made at 129.67 before this outside reversal here on a 2-hour basis. Okay, there's the hourly. And, there's still not a conviction short on this, in my opinion. You still could get that press back into 130 before all is said and done. But basic idea is we're still looking for exhaustion off of one of these 2 points. You need to see downside break below 128.60 to get this thing going. Again, this slope is low conviction. Don't stress this slope. Stress the lateral levels we've been following. They've been working out a little bit better, I think. Until we get a little bit more clarity on this decline. But the idea is exhaustion while under 130. Now, for CAD, it's the only pair that has like some significant event risk into the close of the week. And again, those CAD employment numbers that come out on Friday could be the catalyst we need to get this thing going. For those numbers, expectations are for a print about 200, unemployment expected to hold at 5.8%. Net change, you're expecting about 23,000 jobs to be created. Previous month, we saw a contraction of about 1,000. So, dollar CAD or Canadian employment numbers have always been super variable, but nonetheless, it's the only event risk worth of note for this pair. Any questions on dollar CAD, number 3? Okay, let's jump into what's been moving on the day, and that is sterling. So what a move we just made right here. Sterling looks like this on the weekly charts, and I think it's important to keep in mind where we are. The basic focus of why we started looking at this earlier in the week was this reaction that we got on the weekly charts to basic slope support that we've been following off the yearly highs. Pretty impressive candle there, right? With momentum briefly dipping into 40 and rebounding right off it. So again, if the broader uptrend is still intact, or if there's still going to be a larger bounce here before you break down completely, this is what you want to see. So right off the bat, before we even jump into the intraday charts, a couple things you want to take note of on the upside right here is the 2017 high week close. Okay, that gives you 34.95. And then the 52-week moving average is being tested right now. So obviously for this chart, it's all about the weekly close, but this is your area to beat. Okay, this is your area to beat. We need to close above 34.94, 34.95 to validate a larger reversal, targeting the median line. So we have to revisit this again at the end of the week, but just know that this is sort of an area of resistance near term on sterling. Here's what it looks like on the daily chart. Okay, just the basic lower 50 line for the formation. Okay, again, on a closed basis has been ridiculous. Break, instant resistance, pull back into support. Look where we're trading right now, right? You can't make this stuff up. So, and do I want to be long sterling? Generally speaking, I'd like to see this pullback, yeah, give us a little bit more upside towards the median line. As it stands right now, you can't jump into any fresh long exposure because you're testing near-term structural resistance. So look for a reaction on this one, basically heading to the close of the week. Here's what it looks like on the intraday. Okay, now one thing is, and I noted this in the report earlier in the week, is this could be, and I'm sure this is what a lot of people were just trading on right now. A lot of people are looking at this as a bear flag formation. So classic technical analysis formation would see the bear flag or pennant break to the downside, and you look for a new low. Based on the weekly charts, I'm not using that working assumption just yet. This is big support, and the way momentum reacted, the way price has been reacting, where the dollar is trading, right? All of this has me still favoring some sort of stronger reaction on a move into 34.95. Look, if we get up there and it completely collapses, fine. We'll know pretty quick. But based on the magnitude of the decline, where we are, I think you have a little bit more upside to go. So that whole idea of this being a bear pennant or a bear flag, that materializes with a break below 33.45, which is the weekly open, and that was our bearish invalidation level last night anyway. So the way I see it is, you're in the formation until you're not. So until we break this, we're working on the assumption that we're coming off a pretty big support barrier. So I guess the question at the end of the day is, Mike, how do we trade it? I kind of jumped in and took a little bit of a snip here. It was about 11 or 15 pips on a quarter of the position. Then I got stopped out really quick on the break on the pullback here. This is classic washout material. You know what I mean? Everyone who's been long, putting their stops just below the previous session lows, market comes in, washes them out, and then rebounds higher. I'm not really in favor of like trying to fight this from here. But if you put a gun to my head, I would think you would get that test of the weekly open, if not that push into channel support, and then you look for a reaction or a possible long off that. Ultimately, 34.95. The yearly open comes in at 35. That's your level to beat to make any type of longer term assumption on whether sterling has turned or not. But classic sterling stuff. You hear us say it all the time. Professionally traded market, throw over, break of resistance, false break, whatever you want to call it. This is classic sterling material. Classic. So for new exposure, if we get that move back towards channel support, I would be looking for some exhaustion for a bounce again. Any questions on pound? Ultimately, we're still looking for 135. Okay. Number 5, euro. Here's what the euro looks like. So, super clean, just like the dollar index with the reversal and the doji-like formation heading into the close of last week. Here's the rebound. Again, that's the November lows. Remember, we talked about this on the divergence that we're seeing, and that the index couldn't see a test of its low, while the euro did break a test of that November low before rebounding. So again, very indicative of turns. The major first area of resistance that we talked about, still 119.16 on the upside. It's your former yearly opening range lows, the January lows, to put it simply. And you have your 52-week moving average right in there. Okay, they're basically overlapping right at 119.16, so just above the 119 handle for the euro advance. Still looks good. And if you're holding longs on this, still looks, I wouldn't dump on it. Obviously, we're still long on the swing side of trades, guys. We took half that position off. If you saw, we sent out a tweet last night, exiting half of the position on the euro. So we still do have half of that position left on with our stops at break even. If it pushes through, or excuse me, our stops at 117.05, it's pulled in. But if it pushes through this next near-term target, watch 119.16. Okay, a little bit more than 100 pips higher, a little bit less, excuse me, than 100 pips higher from here. So the weekly chart's pretty clear as far as what we're looking for into the close. Daily looks like this. Okay, basic retracement from the decline off the yearly highs. So this takes into account all of 2018 trade. This was the issue yesterday. Didn't turn out to be an issue because we closed right above it. So forget that 1757 level. Let's keep this clean. 118.27. Okay, was the measured 1618 extension from the decline off the highs. Perfect swing low, and this was our last target here. So we're pushing through this now, okay? 119.09 is the 38.2. 119.16 is that level that we noted on the weekly charts, right? The former yearly lows for January. So levels are super clean. Here's what it looks like intraday, and this is what we've been following. Okay, and here's what it looked like last night or previous, right? We were talking about this descending channel, break of it. We tested it as perfect support here. And we were looking for a break of the weekly opening range, favoring the long side 118.27, first target 119.09, second target, right, into 118.97. So 118.27 is right here. We're taking that out now. Momentum's an overbought, so don't get cute here. If you're holding on to positions, again, stops at break even or better. The 117.05 stop that we have on the swing trades, don't change that if you're still in the initial core position from that trade. But all things held constant, still looks pretty decent. I do want to take an extension off this move now. I'm going to do this one. Okay, gives you the 100% extension just ahead of that 118.67. A decent pivot. Okay. Okay, dump that 118.97 target and work with both of these levels on the upside. Okay. Okay, any questions on euro? Looking good. See if we can get that extension to 119 and get this thing into that measured move. Okay, moving right along. I do want to circle back and come and just hit Euro CAD real quick before we move on to the other dollar crosses, just because it's in an interesting juncture as well. Number 6, here's Euro CAD. And here's what we were looking at earlier in the week. So, on this one, you were looking for a reaction here, essentially, right? 152.12, we were talking about that level. We've been following this one for a while, ever since that tag of 149.68. Upper or basic channel resistance. You had a basic 236 retracement and those former swing highs from the late May decline. So look for the break, right? Weekly open 1596 or 5096, and we like the top side. And if this thing had legs, we were looking for support ahead of that 5098 level. Well, you got a brief pullback before it eventually did break higher. Here's EuroCAD now. Okay, so you got a brief pullback. It came into 151.25. Remember, we were looking for a hold at 150.98. Really strong reversal, push through, and we've taken out 53 at this point, trading just above it. Again, my only concern with this one is that you have that CAD data on Friday, and dollar CAD is still kind of holding its range, so we want to see that cleared as well. All things held constant, though, looks good. Next top side target's 53.92. You want to bring up your bullish inval now from 50.98, where it was earlier in the week. You want to bring that up to 52.12 again. So if we were to come back and just see a test of former resistance as support, I wouldn't freak out yet. And ultimately, I do want to see if we can get some slope on this. Oh, look at that. So the median line comes in right around that same level again, 52.12. I want to see price hold above that. Just don't know how much merit we can put on this. Yeah. So a 38.2 line, again, you don't want to get too creative on it, but it looks like it offers a little bit better on the slope and near-term support right here at 52.80s. So look for a reaction there. Obviously on the upside, 53.92 even comes into focus even more so with that slope. Now again, too early to really rely heavily on it, but actually it looks pretty decent as far as the extremes. So some updated targets there for you on EuroCAD. Still looks pretty good. Any questions on EuroCAD? Again, here's what it looks like on the daily chart, right? This was a big region. You had the 200-day moving average there as well. Channel resistance. There's a 50% that we're pushing through now. Looks pretty decent. And again, EuroCAD on the weekly charts. If we settle the week above this slope, certainly would suggest that we put in a pretty significant near-term low. Okay. Dollar yen. Here's number 7. So it's stalling. It's doing what dollar yen does. Obviously on the swing side of things, we're still 110.30 is kind of our line in the sand. We're still holding shorts off that region. But nothing's invalidated yet. There's been a lot of chop lately. Basically, I'm looking at this 52-week moving average. A lot of these pairs are testing their 52-week, which is kind of something to pay attention to when a lot of assets are all near their 52-week. So a couple things I'm looking at. A is that 52-week into the close of the week, which is 110.30. Secondly is basic trendline support. from 2012 lows. Okay, it's been a very strong pivot in price, support, 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 break, acceleration, and then we've been pivoting on it on both sides ever since, right? So resistance, resistance, resistance. The break gets a pop into resistance from a lateral standpoint, slam lower, and here we are again. So from a weekly standpoint, I do want to see a weekly close below 110, 110.30 to be precise, that to a 52-week moving average. That would be a little bit more of a conviction for a pullback in dollar yen. Okay. Now remember, I mean, a lot of people who were calling for this were suggesting that it was going to be the risk off trade. That's not necessary, right? It's not a necessity for that to actually materialize for yen strength. We have the BOJ on tap next week. There's a lot of event risk on tap, a lot of yen specific and yen correlated assets, right, with the Fed. Obviously, huge moves in U.S. yields will tend to move on yen pretty strongly as well. So, you know, I don't want to take too firm of a stance, but our entry was great. We're at break even. If it holds, it holds. If not, it not. You know, here's what it looks like on the daily chart. So you not only have the 52-week moving average, but you also have the 200-day moving average. And that right now is converging right on the 618 retracement of that May decline. And on a closed basis, look what we did yesterday, right? So I don't want to just jump along with the bandwagon. You know what I mean? This is not. There's nothing here that suggests that this thing is breaking out to 111 yet. And resistance is resistance until we break. What's interesting is that momentum is turning right ahead of 60, right? Pretty clean turn there, as price is turning right from lateral or horizontal rather resistance. So intraday looks like this. Here's the setup, and this is what we've been following on the intraday charts. Okay, so here's what it looks like from the start of the week. There really hasn't been much change. In fact, if anything, this week's price action has given more merit to the slope, right? Here's the slope as we started the week. There's the median line support. We highlighted resistance into 110.14. We turned right ahead of that into the start of the week. The pullback found support right at the median line. Resistance pushing a little bit through it, right? And the high was registered, you know, we just got pretty close there. The high registered at 110.26, 110.27, just pips away. And here's the pullback. So look, like I said, nothing changes here. You do have pretty strong divergence on this 240-minute chart as far as, or this 120-minute chart, excuse me, as far as the rally into resistance. We talked about that yesterday, right? No new highs in the oscillator as prices continue to press new highs. So look, all hope is not lost yet. You know, we're still 30 pips in the money. If it works, the first place I would look, again, if we get a drop into the median line, if this holds again, well, let's just say this, if it gets that drop into the median line, I'm going to probably bail on 90% of the position, to be honest with you. I don't want to keep my margin tied up into this one. It's just a slow burner at this point. But if we do get that break here, that's where, you know, you start to get a little bit more fuel on the fire for a downside move. Let's just see if this near term has completed anything worthwhile. Okay, there's the 1618. Decent pivot. Nothing to write home about though. So I'm looking for exhaustion here. End of the day, looking for, you know, a blow off for a move lower. At the end of the day, if we do break this level, guys, next topside target is 110.80, 110.87. Just for your information, it's a longer dated 618 retracement and the November low from last year. So sort of a nice area to look for your next target on the upside. Again, our ideal scenario is that this keeps this resistance or fails against these highs. We do get a break below the median line, tack on a quick retracement for those next downside targets, but ultimately we're looking for a move back into the lower parallel. And that's going to be variable, obviously, on time. Okay, any questions on the abomination? Dollar yen in the flesh. That's some food for thought there. That would be the target if we break lower. All right, that is dollar yen, number 7. Number 8, a couple of different euro crosses that we've been covering. I just want to give you a quick review since this is the last webinar of the week. They start off with Euro Aussie and Euro Yen, both trades that we've been following pretty closely. So here's Euro Aus, really nice move, guys. We've been following this one for a while. Here's the last update on that one. So this was on the 3rd. We were looking sideways to higher as we were opening up the week. The basis for this trade has been, the larger, longer-term support structure that we're coming off of, and that's just this 50 line, right? Really clean structure. This is off the 2016, 2017 lows. The upper parallel pretty clean on the 2017 advance. This year, we did probe through it, but the 50 line, break acceleration, median line, break acceleration. There's the lower 50 line. Okay. Also, your yearly open 53.67 on a closed basis. We only got 1 day there before we pushed higher again. So the objective that we were looking on this was the rebound off support. Now that rebound is coming into initial areas of resistance. We're pushing through the monthly open here. Now we're only, 4 trading days into the month. So the monthly open resistance is not going to be that critical of a zone yet, but just higher. You have that 200-day moving average. Okay, so from the near term, or looking at this, let me show you the weekly chart first. Euro Aussie, right? 52-week moving average, yearly open support. Okay, obviously on a closed basis, we're well above this level. So we've been playing the rebound. It's all been about the rebound off of this support structure. Obviously, this was a big break of support. You saw a nice decline, big level here. Now, ideal scenario, and this is just me. Maybe this is just wishful thinking, but ideal scenario, we see an outside weekly reversal off this region. Now, there's a couple of different trades that look like this, and I wouldn't want to necessarily put all my beans on Euro Aus because we are liking the Aussie long. So that would be, inherently against this upside here. But just on the merits of its own situation here, an outside weekly reversal off this confluence support of the 52-week and yearly open would certainly shift the near-term focus back to the upside, at least, maybe for a tag of former slope support. So here's what Euro Aussie at the end of the day looks like on the intraday charts. And here's what we look like, again, from the start of the week. So we got that dribble lower into the yearly open. Again, last touch into 53.16. This was really our bullish inval. Okay, so we did drift below that. Again, slope held pretty well though. So we bounced into it. Here's the top side push, 54.98. Okay, is the January high for this year. Okay, decent pivot in price, former support, former resistance, and converges on basic slope support, break, gives you 54.98, basically 55 on this advance. Does this slope offer a decent pitch? I think so. Resistance, a little messy there. Resistance, break, acceleration, median line, same level we're watching. Okay, I'd be working with that right now. Yeah, support. Discount that, support. So that'll bring your near-term bullish inval right back to the yearly open. Initial support right here. Topside objectives. Again, that January high gives you 54.98, and then you have this median line confluence up here, around 55.50s. All right. Feel free to take a snapshot of this one, guys, for the updated levels on Euro Oz. Interesting. Okay. Okay, moving right along. The other one was Euro Yen. That one was a really nice long. Obviously, the moves that you're seeing in yen not so much impressive, but with the Euro strength, further taking over, it's just pushed through all the targets that we've been following. So here's what Euro Yen chart looked like earlier in the week. We were following this in the webinars. As per your request, guys, someone had brought it up, and we were talking about that major pivot at 124.92 that ended up being the real low, at least for this rebound, right? Real nice basing there. You had basic slope support on the daily chart, a nice 100%, two equal legs down. And we were looking for the pivot back above this slope, also brought up by one of the subscribers here, and we got it. Breached to the upside, saw defensive support, and it's been nonstop ever since. So at this point, we've come into 29.54. We've taken that out. The next upside target is 31.06. Again, I wouldn't, start chasing this at the highs. If you're holding longs, I would just be bringing up my stop. A close to the chest stop would be below 129.40 if you're really just trying to play it safe. If you're a little bit more aggressive, stop needs to be against that swing low or the weekly open. Okay, that gives you basically a 10 pip range down here. But do pay attention to 131. It's not only a big figure, it's a decent pivot in price and slope resistance from the highs, right? Boom, boom, boom. So pretty clean on Euro Yen. Who would have thunk it, huh? Here's your monthly open. Just been a nonstop ripperoo. In fact, we're on the back of a 1, 2, 3, 4, 5, 6. This would be the 7th straight weekly advance. Let's see how many times we've seen that. Okay, last time we saw a 7-week advance was back here. And that was just met with 2-week interruption, or excuse me, this is 7-day advance, excuse me. We only met with 2 days of interruption before continuation. So a brief respite within the confines of the advance here. So very similar to what we're doing here. Let's see if there are any other scenarios. There's a couple. Okay, right here. Again, brief pullback before continuing higher. Brief pullback before continuing higher. Okay, this was a little bit more on the back of a rebound, and that actually capped the advance before we broke down. So the difference in these occurrences when you're looking at this is where are we in the midst of trend? Both of these scenarios where the pullback only materialized for 2 days before continuing higher, both of these scenarios occurred within the confines of a larger breakout, right? You have a series of lower highs, a series of higher lows, breakout, and all of a sudden you get these runs. But within the confines of this, which is a sell-off and a rebound off support, the closest match would be something like this. Okay, rebound off support and a stretch higher off the back of a decline. And that one saw a much larger scenario where you got a much stronger period of downside in dollar yen. My point being, guys, I hope I'm not confusing anyone. My point being is based on the last several instances where we've seen 8 or 7+ day advances, within the confines of an uptrend, it's typically just a 1 or 2 day correction. Within the confines of a bounce off support within the downtrend, typically is going to be a little bit bigger of a correction. So, we'll have to see how we close out the day, guys, but this is the area of which you're initially going to start to look for some kickback if it's going to pull back. And that's 131.06. Okay. Questions on Euro Yen? Actually has been pretty clean. maybe. Breach, get that last run into 31 before you start to move again. We'll see. Okay, that is Euro Yen, number 9. Anyone want to take a look at Aussie Kiwi? I don't know if any of you guys are trading this anymore. I haven't put anything on it this week. It's kind of just like blah. I'm kind of kicking myself because we were talking about 108.91 yesterday in the webinar. I was telling you how this is such a big level and yada yada. We broke back below. I didn't take any position on it because I didn't want to get short Aussie per se, but it's been a pretty decent pullback. Okay, you're still within the confines of that formation. So look, this is low conviction for me. As far as I'm concerned, guys, this is the weekly open. Weekly opening range high, weekly opening range low. I discount this as a failure to break through the weekly opening range high. Puts the emphasis on a move back below 108.29 to get bearish. Otherwise, this is a range. I'm not really trying to get involved in this one again. So nothing really new to update on Aussie Kiwi. The daily chart obviously still has us in a pretty well-defined region. So take it for what it's worth. Putting in a decent monthly opening range. Hopefully you get some play. But this pivot back below the 200-day moving average, pivot back below the 618, kind of puts the emphasis on support. So if you're holding long Aussie trades, this is actually a decent one to offset some of that position, sort of a synthetic hedge on the short side if it does break. But for me, I'm treating this as a near-term range right now. There's nothing here that's super conviction. All right, crude and gold. Here's what crude looks like. Interesting stuff. Just some basic slope support. I guess I should take you for the weekly charts first on crude because this is sort of a big position here. So I think we covered this yesterday in the webinar. The analog that we've been following from the 2009 advance. It was just a couple of weeks off, or not even a week off of the pullback. Here it is. So, for the next few weeks, I'm expecting sideways to lower price action. Near-term resistance still 67.46. That's going to be the high week reversal close for the year. And I'm not looking to play, necessarily this is going to follow suit, but the initial target is still going to be the lower parallel. So any way you slice it, it's still a little downside room. Now, with that said, we are testing basic slope or parallel support. Remember yesterday we were saying we don't know if there's any merits to this line yet. It's just a parallel of the same slope, but on the upside, it did catch the highs with precision. So could this offer some support for crude? Sure. I want to stay bearish below 67.46. I want to see a tag of the lower parallel. And again, the analog kind of plays along well with this so far. Okay, on the daily charts, again, the 50 line for the current ascent. This is just a basic pitchfork off the lows. Okay, we're testing that now. A downside break below this, you're looking for 63.80. Bigger support at 60. The 200-day moving average. 38 retracement of the advance off the lows. And a 618 extension from the advance off the lows in 2016. So big level, all on slope support. Okay, first things first, you are checking near-term support here for crude prices. Here's what it looks like on the intraday. So it's been real sloppy on the intraday as far as trying to get a handle on this thing. This break I thought was going to materialize into a tag of that 618. We turned just ahead of it, guys, and we've gotten to consolidation ever since. So whenever things get confusing, just zoom out and get as objective as you can. And what I see here is a series of lower highs. I see a series of higher lows, and that suggests to me that we're in simple consolidation. Okay, so we need to wait for the break to give us the guidance for the immediate slope. Again, if we break to the upside, look for a near-term recovery, but ultimately we'd be still looking to sell that recovery well below the median line. It actually matches up pretty nicely with those highs. So levels are kind of jumbled up here on the intraday charts, but bigger picture here still looks pretty clear as far as what we should be looking for in crude prices. Last but not least, gold looks like this. it's also been kind of a snoozer this week, but the levels, again, just continue to highlight really clear price action. So the thing you want to take into account here is 1302, 1300. We've talked about that level multiple weeks now. It's the 2018 Open. You have a basic 50% retracement of the advance off the November or December low of last year. You have the 100% extension from the decline off the highs. All of that is just stacked up here, okay? So watch 1302 on the upside. Also on the weekly charts, guys, clear cut 3-point momentum trigger. Okay, so if we materialize a close above 1300, momentum is able to close the week above that resistance trigger, that would be bullish, straight up. You're looking for 52-week moving average, 1307, bigger resistance, 1313, 1314 for gold. Okay, key support at this point, you got to bring it right back in 1285. It's the weekly charts, or the daily charts rather, right? Intraday looks like this. Okay, basic slope, 1, 2, call that a hold. This is the resistance region we need to break. This would be your target on the upside. Okay, now if this is a triangle consolidation, which it could very well be if we get this third tag here, right? This would necessitate the breakout for us to get more of a triangle type of play on this. It's not the cleanest. I guess you could work with something like that, a little bit more pressing. And one thing I do want to check out real quick, guys, is this extension off the lows. Wow, the 100% right on 1314. Pretty sweet. And the 618, 1305. Okay. Near-term constructive above 1291, let's call it, and bullish invalidation still 1285. If 1285 gives out, it's gonna fall apart. It's gonna fall apart real bad. Not my favorite scenario, but that's my line in the sand. Okay, so that is 10 and 11, crude and gold. Any other questions or trade setups you guys want to review before we close out the session for the week? Do let me know. No change to any of our webinar schedules for next week. We're right back on for full allottage. So again, Monday for the free session on Daily Effects, Tuesday, Wednesday, and Thursday here on SB. Go ahead and close it here. If there are no other questions, guys, have a great weekend. Again, look, the event risk is light until close of the week, except for CAD data tomorrow. The big stuff next week is really going to be in focus. So don't get too heavy levered on anything. Again, that Korean summit is definitely going to be something of significance, especially if we get or don't get anything or hardcore agreement out of that. And obviously the FOMC guys and the BOJ, there's a lot to look forward to. So if you're not in any major positions right now, don't worry. We're just putting in these monthly opening ranges and there's a lot in store. Have a great weekend, guys, and I will see you all next week. Cheers.